Hey there everybody right around the world. Thanks a lot for joining me on this weekend market update. I'll be reviewing obviously the first week, which has been for the calendar year 2018. It has been a relatively impressive start to the year 2018. Personally, I did not believe we were going to see the breakout. However, with these contingent orders that we do have placed on the Dow, the S&P, and the NASDAQ, I hope that you have taken advantage of this tremendously fast-paced start to this particular year. Now, if you look at the Dow Jones Industrial Average, up 576 points over 4 days worth of trade. You can see for yourself, this is the weekly chart on my screen at the moment. Another really impressive long day Morobozu candlestick. We are still yet to actually factor in Friday's session's worth of volume. That is why the volume print on my screen is a little bit lower to past weeks. But when we recalibrate that, of course, Friday, I do assume that it is going to be at least on par with what we saw 2 weeks ago. Again, indicating, of course, that the trend itself is legitimate, and we're expecting, again, continued follow through further into and throughout January, but also really into the first quarter of 2018. The S&P 500, again, blowing above that 2,698 entry. If you are in the SPY trades or any positions, this has been another tremendous profitable trade over the past 4 days. If you've been in this trade at lower levels, 2,681, 2,669, or even as far back as the month of November at 2,606. What we've seen really over the past 3 days, where we saw the breakout occur on Wednesday, is just the continuation of profits flowing into your accounts. And I want to, of course, congratulate you on that as well. Now, to conclude with, when it comes to the individual markets themselves, the NASDAQ, it is no surprise to see the tech companies booming as well, above 7,013. That was the most recent breakout trigger. Again, that triggered on Wednesday, but some pretty decent follow through as well to the upside. If I change to the weekly candlestick of the NASDAQ, you can see another long week Morobozu candlestick, up 233 points, a pretty impressive move to the upside. And again, this is all being validated, of course, by the ADX turning up and the CCI holding very strong above that positive 100 reading. That, of course, is the signal for the NASDAQ in the top left-hand corner of my screen. If I walk you through, of course, the Dow Jones Industrial Average, you can see again the CCI printing at 165, the ADX turning up already from elevated levels, but it is still firming up above 50 at this particular point. A long way for this market to run before we need to, of course, consider taking positions off the table. We don't have any warning signals at this particular juncture, really indicating the need to really take back, or at least take profit off, what has been a very fast-paced start to 2018. And again, to the S&P 500 or the SPY positions, again, the story remains true. The CCI holding closer to 200 than what it is 100, and the ADX turning up from a relatively stable reset zone down here around the 20 points, printing at 36 at the moment. So pretty decent positions, of course, profits if you're in the Qs, if you're in the SPYs, and also the diamonds, the DIAs, take your pick. I do believe you should be in at least one of these, if not all three. But again, a pretty tremendous start to 2018. So what does this mean for our top 12 individual trade list? Well, Apple, it hasn't broken out yet. It is on the precipice of doing so. This is one of the stocks that actually hasn't triggered above our most recent swing high, which takes us back to December. 177.66 is our breakout trigger. However, there was the opportunity that we spoke about over the last week in Pro above 172.10, and we have moved above that. We actually closed above that on Tuesday, the first trading session for this calendar year. We closed the gap on Wednesday. We did see a little gap on Thursday, but then a continuation again on Friday, essentially closing above the gap. So it's only a matter of time until we do break out above 177. If you took the 172 trade, congratulations on that particular trade. Now, if you continue into Amazon, breakout trigger was a little bit lower, or at least settled below the high of this little candlestick over here. 1,206 was my personal breakout entry. We're closing at 1,229, just shy of 1,230. So a pretty decent move here on Amazon. I'll be updating you on this in this weekend's Pro analysis class. If I continue with the analysis, this is something that comes as a little bit of a surprise to me. Personally, I did not have the 301.66 entry open in Boeing Airlines. It was something that I personally thought needed a little bit more time to rest, to consolidate, to actually set up a little bit more resistance and support until we saw the breakout. So I am sort of kicking myself as I sit here on Friday evening and record this. But again, above 301 and closing at 308.84. So a pretty impressive breakout. I'll update you again in that over the weekend. Baidu is holding above our 242 entry. It is also above our 238.13 entry as well. Not as, I guess, big of profits on this or a percentage ROI at this particular point, but I still have Baidu coming all the way back up to about 275 over the coming months, if not weeks. So looking good on this particular trade as well. Now, Caterpillar has continued to the upside. Again, I am personally not in Caterpillar. I wish I was, as at Thursday and Friday, but we have already capitalized on a pretty decent run from 140.80 and 143.53 most recently. But this dates back more so to the midway point of 2017, as low as 108, even below that 100 psychological round number down here at 95. So a pretty decent run up on Caterpillar. And again, just strong continuation across the board with a lot of these companies joining in and participating in this most recent rally to the upside. Now, COP flinched at our breakout trigger, 56.90. We're slightly below this. We're at 56.88. We're marginally down 2 cents, but this is firming up quite nicely as well, expecting this to continue over the coming weeks, but again, it hasn't definitively broken above that level. CVX did break above that level in the first session this week on Tuesday. It is holding above this. It looks as though we are setting up some form of a little wedge, or even a bull flag or a rectangular stair-step pattern. Take your pick. They are all of them anyway that I've just mentioned will of course continue in the bullish direction. Let me just bring up these exponential moving averages for you, and you can see for yourself. Generally, we just wait, of course, for that 10 exponential moving average to catch on up to price before we see that next trampoline to the upside. So CVX is looking pretty decent as well. Now, again, continuing with another tech company at this point is Google. Google broke out above 1,088. It also broke out above 1,070. We're closing at 1,110. So I'm very happy, very pleased about this. It does take out a little bit of, I guess, the FOMO, so to speak, of missing out on the Boeing Airlines profit, and also potentially the Caterpillar continuation. But when you look at the movements in Google, for instance, if I go to the weekly chart, we closed up just shy of $60 on the weekly chart for Google. So this is a pretty impressive move. Of course, when you tie in those call option derivatives as well, this is a tremendously profitable trade, and it just looks to simply be continuing in the direction of the macro trend, which is applicable to all three of the markets that I've already summed up. Now, Goldman Sachs, however, isn't really participating at this particular point. It's still stuck above, first of all, its support area, which is positive, and we are still waiting, of course, for one of these exponential moving averages to be that definitive area of support to bounce off and to continue. We haven't seen it yet, however, it is coming, so stay patient on Goldman Sachs. I'll give you another trigger over the weekend in that analysis class as well as to how we can sort of play Goldman Sachs moving forward. Now, also, IBM and Netflix, these are two fantastic trades as well. I didn't think IBM was actually going to trigger. 158 was the entry. To my surprise, on Wednesday, we were triggered into it. This was a target at 160.42. Again, we just blew straight through it. We're closing up here at 162.49. So, I mean, I still have higher targets on this, much higher targets actually. The first, or at least the next target, is 166. This is where I think IBM is going to slow down more so, not so much at this 162 pivot. So once we get to 166, we'll be looking to take some profit out of this trade. But again, just hold on to IBM at this particular point. And as I continue into Netflix, boy, this was such a surprise to me as well, along with Google. Over the last 4 days worth of trade over the abbreviated shortened trading week, taking into consideration the first, or at least New Year's Day, around the world. So here you can see with Netflix, top left-hand corner of my screen, entry was at 199.87. You can see that we're closing it just or more or less right on 210 at this particular juncture. So we're up about $10, a really decent move for Netflix. We are moving into earnings for a lot of these companies. Again, I'll update you on that over the weekend. But really to conclude with at this particular point, we've got Tesla and then Facebook. Tesla's still lingering around essentially no man's land at the moment. This picture is still becoming very clearly bearish, but at this particular time, there is no real bearish short opportunity on this. It is going to take a little bit more time, but the longer we remain below this pivot over here at 350, this is just going to continue to add to already the the severe amount of resistance that's simply forming at this old support area, which is now that resistance back test of the neckline. So as long as we hold below about 345 up to 350, this is going to be a tremendously bearish trade, or at least it should be, for 2018, and essentially that time clock is ticking down to when we are going to see the definitive break of these levels. And again, that's largely contingent and dependent upon how traders and investors interpret its earnings in due course. Now, just to conclude with, we've got Facebook as well. Facebook broke out, which is fantastic. It not only broke out above 178.61 definitively, but we have moved above 182.95 and also above our third trigger on this at 184.58. So it looks as though all of the stocks really in our top 12 list, or at least the vast majority, are participating in this most recent bullish breakout, which is fantastic. It has been a very, very profitable start to 2018, which I'm very pleased about. And again, I'll be recapping this in more detail and going through the analysis more so, or in more depth at least, on the broader financial market indices, and then in our top 12 individual trade list, plus Facebook, in a matter of minutes. Okay, so having said that, enjoy your weekend, everyone, right around the world. I encourage you to have a look into Pro. It's a fantastic resource if you're looking to learn and understand how to interpret technical analysis and then apply it to, I guess, the live charts and the real world financial markets for a forward week. Okay, upcoming, and we recap obviously the week which has been, but then of course the analysis helps us to forecast what we should be seeing for the week upcoming, which is a tremendous advantage to those who want to learn. All right, so on that note, I'll be saying goodbye. Enjoy your weekend. I'll be back with you in due course for some more market updates. All the best. It's James signing off on behalf of Pivot Point Trading. Goodbye.